When investing in gold, is ETF the best method, or is physical gold the best method, or is it going to be sovereign gold bonds? Should I call it sovereign gold bonds? Sorry about it. Okay, so when it comes to ETFs, as you all know, it is traded in the trading platforms. It is available by SBI, it is provided by HDFC as well, it is provided by Reliance as well. So you can see which ETF is having the largest number of shares being traded, and accordingly decide which ETF you want to enter. According to me, the Reliance ETF for gold is the largest traded, and a lot of quantity being traded in the Nippon Gold ETF, which is by the Reliance Fund House. So I'm not promoting it anyway, but you can choose for HDFC Gold ETF as well, or SBI Gold ETF, or ICICI Gold ETF as well. But however, keep in mind what is the level of transactions going on, depending on what level of investment you are going to make, because when it comes to selling, you need to have that amount of crowd waiting to buy as well. So accordingly decide which ETF you want to select. So okay, then comes to physical gold. Should I do ETFs or should I do physical gold, right? So in my view, there should be a balance between ETF and physical gold. And physical gold and ETF, for me, it should typically be like 60% of physical and 40% into ETFs, because we never know, right, whether is this mutual fund houses having the degree of gold which they are claiming to have or not. We can not take that risk. So to avoid a risk to that some specific extent, let us have physical possession of the gold as well. I know physical possession of the gold is risky, but however, you can decide how to avoid the risk. There are many methods of how to keep the gold safe. And then there is digital gold as well, which promises you that if you invest and you have to pay a GST of 3%, but you don't have to pay the making charges until you want to get them physically delivered to you. So that is another avenue, that is the digital gold, which is a representation of the physical gold itself. So if you want to not have physical gold stored, then you can go for digital gold as well, because a lot of platforms, they are supporting digital gold to the support of Brinks, and Brinks is a vault where all the gold is kept in a safe, and it is reliable by a lot of fund houses. So that is another option, that the digital gold, which goes alongside the physical gold. And finally comes the sovereign gold bonds. So sovereign gold bonds, there is a lock-in period, as you all understand. So this locking period makes it difficult to remove the amount which we want in case we want to invest into a downside of the market. If you want to buy cheaper stocks when they are available at a window of opportunity, then you may not be able to sell sovereign gold bonds if the time period has not expired. So sovereign gold bond makes it difficult to sell gold, and to some degree I'm not that comfortable of investing in sovereign gold bonds, because if you are locked in, then by the time you get out, I'm not sure whether gold is going to remain a higher value when you exit, or is it going to be at the same level. If you have missed my previous video wherein I've shown you the gold started off at some particular year and then increased after about 4 or 5 years and then stabilized back. So if you're going to wait for like 5 or 6 years to encash your gold through sovereign gold bond, then you will be typically at the same rate of return. So gold is coming of use when it goes high, when the stock market crashes, so that you can buy more paper assets at that point of time. So that is where the gold comes to our advantage, to our rescue, when we need the cash or liquidity the most for investing into paper assets. So I hope you got some level of idea of which are the most better method of investing in gold, preferably ETFs and physical or digital as well. That is fine. Digital takes 48 hours to encash your cash, and even physical takes around 48 hours. But when it comes to ETF, it is more liquid. Within a day, you get the cash. So that is the reason why I said to keep a percentage balance, because to avoid some degree of risk in terms of certain government regulations. So I hope you like the video. If you want to gain from subsequent videos, please subscribe. Do not forget to click subscribe. See you in my subsequent video. Bye.